Hi, this video is about accounting process. Let's see the complete accounting cycle from where the accounting starts and how we reach to financial statements. Transaction occurs. Accounting starts when a transaction occurs in business. And when any transaction occurs in business, there is an evidence of transaction. An accountant will never record any conversation or idea. The evidence documents will be analyzed and verified before recording. In case of sales and purchases, the company do have approved quotations, purchase and sales orders, invoices, and receipts of goods, etc. Debit and credit notes. Credit notes issued by suppliers to customer related to return goods or refund when customer has been overcharged. A debit note is from customer to supplier against return goods or a correction. Same way, when a remittance advice received by customer, in short, the source documents are verified and analyzed before recording. Then after, it's a recording in books of prime entry. Once the transaction been verified with the source documents, it is entered in relevant books of prime entry. There will be a separate video regarding books of prime entry, so we'll come later on that subject. Then posting to journal ledger. Journal ledger is the backbone of any accounting system of the company. As the initial transactions are recorded in books of prime entry, and then after the entries are transferred to their proper relevant individual accounts, which are opened in journal ledger. It is the stage of classifying of data. Each account's balance is known in journal ledger, which helps to make financial statements at a later stage. There is a list of accounts in general ledger. The act of transferring an entry from books of prime entry to general ledger is called posting. General ledger is of two types. There is a column-wise general ledger, and the other was is T account general ledger. Now the trial balance. A trial balance is a statement prepared with debit and credit balances of the ledger accounts. As the accounting is based on double entry system, so the trial balance debit balance total must be equal to credit balance total. If the transactions figures have been posted correctly, then there shouldn't be any difference and trial balance debit balance total will be the same as of total of credit balance. The trial balance reveals the arithmetical accuracy that both the entries of all transactions have been posted correctly and nothing is left in posting. Here is the example of trial balance where all the list of accounts are there and the debit and credits are the same. Then we have the adjusting entries. Accounting is based on matching principle. That means that the transactions for the current period must be recorded in the same period, so the result in terms of profit or loss is accurate. There are some information which are known after the closing, so adjusting entries are made to incorporate them. Basically, There are four types of scenarios where adjusting entries are needed, and those are accrued revenue, which is number one. The accrued revenue is the revenue receivable. This is very common in some of the service industries where reports about part services rendered come late and that income need to be recorded. The second one is accrued expenses. Accrued expenses are expenses payable. It is a liability, those expenses which have incurred in the accounting period but not yet paid, like utility bills of that period which reach late, staff salaries of that period which has not yet been paid, etc. Prepaid expenses. Prepaid expenses are those expenses which have been paid in advance and can cover part of the current period and rest for the next period. Prepaid expense is an asset. Current portion of prepaid is reversed and charged to expenses. Examples are prepaid rent, prepaid insurance, etc. The fourth one is unearned income. This is a sort of income which has been received in advance prior to deliver goods or render services. For instance, a consultancy fee received for 1 year, which covers a few months of current period and rest for next period. An adjustment will be made at the end of the year by treating an income for only current period, and rest will be put in unearned income, which is a liability and will be treated as income next year. After the adjustments, a new trial balance will be dragged, which will be called adjusted trial balance. Financial statements. On the basis of trial balance, financial statements, which are profit and loss account and balance sheet, are prepared. Profit and loss account shows the company's performance, while balance sheet indicates company's position. Then come books closed. Then books are closed for current period. All revenues and expense accounts are reversed by getting profit or loss. All balance sheet items are carried forward as opening balance for next year. Thank you, and see you in next video.